Hello everyone and welcome to another Elliott Wave Forecast intraday video day. My name is Eric. Today is Wednesday the 12th of February around 1:30 p.m. Eastern Times, and here we go with an analysis of the S&P 500. Like we've been telling the members over the last week, that the trend in the S&P continues to be to the outside. We knew all over that the S&P was doing nothing more than a correction that we have it laboring as a wave for in double parenthesis in black right here. Now, what is the structure of the S&P decline? Like we told you guys, a simple three-way move. If you take a look at the S&P from the highs to the bottom, you can see in the RSI two sequences. One that provides divergence here, which is this low, and another one that provides divergence here, which is this low. A sequence with two divergences usually doesn't make a five-way move. Either way, we got 1, 2, 3, 4, 5 in wave A in blue, which is the swing number 1, a B, which is the swing number 2, and 1, 2, 3, 4, 5, which is the swing number 3, that makes a simple textbook ABC. 1, 2, 3, 4, 5, A, 3 back, 1, 2, 3, 4, 5. It makes an ABC by concept. So the S&P decline comes in three ways. What does it make? Exactly what we were telling you guys over last week, that this decline in the S&P is nothing more than a gift to buy the S&P at lower levels. Now the best strategy for now on in the S&P is waiting for this new cycle that started right here on the 5th of February to end, and then when that cycle ends around this level, buy 3, 7, and 11 in the S&P against this low. Don't force the bears counts. I know that some waivers now they're gonna believe that this is a flat. That's not the right way to go. Why? Because the sequence here entering this low, it goes with divergence. This divergence here and this reaction makes what we call a 3-5-3 setup to the outside. So the S&P is as bullish as we can get. Don't believe, don't fight the human nature. The human nature of the humans is a bullish trend. Don't pick top. Picking tops is a losing proposition when it comes to trading. Don't think about crash. Who say that the market will crash? The market will correct. Remember, the trend always is to the outside, and every decline is an opportunity to buy in some degrees. If you follow those simple principles when you're trading stocks, S&P and indices, technically you're gonna be a winner. If you're thinking about crash and that the market is gonna crash, at the end you're gonna be ending losing and creating false illusions like the decline that comes from the highs over the last month or so. This was a great opportunity to buy the indices. Our members knew when the S&P was around here that the low was in and that it's gonna go higher. That's the way to go. Follow the trend, because the trend as a human nature trend is to the outside in the indices. All right, correction 3, 7, and 11 are a gift to buy the indices. Thank you all, and I see you guys, and I hope to see you soon, or new members around Elliott Wave Forecast.